So we all wake up early. We dissect our spreadsheets, track our portfolios down to the very last penny, and try to mimic the morning routines of highly successful people. Why? Because we're hoping to find that guaranteed, bulletproof formula for wealth. And man, it's incredibly frustrating when you feel like you're doing absolutely everything right, making all the sensible choices, and yet the financial needle just refuses to move the way you planned. But what if the biggest drivers of our financial destiny aren't actually found in a textbook, a stock chart, or some new productivity hack? Today in this explainer, we're unpacking a massive, paradigm-shifting concept from Morgan Housel's brilliant work. We're going to uncover the fascinating invisible forces that secretly dictate every financial success and failure, completely dismantling how we view achievement and loss.
To really wrap our heads around this, picture two identical entrepreneurs. They're starting out with the exact same relentless work ethic, the same intelligence, the same resources. Let's say they're both building software startups in the tech space. They launch their companies in the exact same year. They both grind out those brutal 16-hour workdays. They're incredibly sharp. They're both missing their kids' bedtimes to code new features, and they push all their chips to the middle of the table. I mean, they are heavily leveraging themselves and investing absolutely everything they own into their vision. On paper, they are absolute mirror images of determination, skill, and raw hustle.
But fast forward 5 years, and we see an absolutely staggering contrast in how things turned out. Entrepreneur A hits a massive valuation, goes public, rings the bell at the stock exchange, and boom, becomes a billionaire. Entrepreneur B, on the other hand, despite matching A's step for step in effort, intellect, and pure sacrifice, is sitting quietly in a lawyer's office filling out bankruptcy paperwork.
I want you to really think about this for a second. What unseen force separated the billionaire from the bankrupt founder? Our egos desperately want the math of success to be simple, right? Effort plus intelligence equals wealth. Because if that equation is true, well, it means we're in total, absolute control of our lives. Our brains naturally want to solve the puzzle by assuming entrepreneur A must have possessed some hidden secret genius. Or, maybe they just ground it out a tiny bit harder when things got tough.
Actually, the answer lies in two forces we rarely talk about openly. These are forces that gently but firmly dismantle the myth that we have 100% control over our destinies. I'm talking about luck and its darker twin brother, risk. These are literally two sides of the exact same coin. They're the powerful, invisible variables in the complex equation of life, and they demonstrate time and time again that our financial outcomes are heavily influenced by chaotic factors that we simply cannot plan for, predict, or manipulate.
It's funny, we're so obsessed with these simple narratives. You hear it all the time. They worked harder than everyone else, or they never gave up, or they had the perfect strategy. We attribute wealth purely to hustle and grit, while completely ignoring the immense role of timing and opportunity. When we see someone make it big, society loves to point and parrot those exact phrases. And while those things might absolutely be true, hard work is a vital baseline for sure. They are rarely the whole story. We tell ourselves these myths because the alternative, admitting that we don't have total control over the universe, is pretty terrifying. Admitting that luck plays a massive role shatters this comforting illusion of a perfect meritocracy.
Just look at how luck often disguises itself as pure skill after a success has already happened. Take two software developers as an example. Developer A launches their product just weeks before artificial intelligence explodes into the mainstream consciousness. They catch this massive, totally unpredictable cultural wave and build a global business. Now, developer B builds a nearly identical, equally brilliant product, but launches it 3 years earlier when the market just isn't ready. They burn through their capital, experience the deep frustration of being misunderstood by investors, and quietly disappear. Was developer A drastically more talented? Or did they just arrive at the exact perfect moment, catching a tailwind they didn't even create?
Think about Bill Gates. He is arguably one of the most brilliant and determined minds of our century. His vision and his work ethic were completely off the charts. But to truly decode his success, we have to look really closely at the environment he was placed in. Building up his undeniable genius is important here, because recognizing what comes next doesn't invalidate his incredibly hard work at all. It simply adds the missing piece of the puzzle.
And that missing piece is that luck opened a very specific, incredibly rare door for him that millions of equally intelligent people never had access to. Back in 1968, when Gates was in high school, computers were these rare, massive mainframes that cost millions of dollars. Honestly, most top-tier universities in the world didn't even have computers for their graduate students to use. Yet his specific high school in Seattle happened to be one of the very few in the entire world that had a computer terminal a student could actually use. That early, unfettered access wasn't something he earned through hustle. It was a 1 in a million geographical and historical lottery ticket that changed his life forever. But if luck is the force that propels us forward unexpectedly, well, risk is its darker twin. Let's imagine a young, ambitious investor putting all his life savings into one single, highly volatile tech stock. If that single stock moons, the financial magazine covers are going to hail him as a visionary. But the core decision, risking your entire net worth on one asset, remains identical whether it succeeds or fails. If the stock crashes, suddenly he's deemed reckless and foolish. The only thing that actually changed between him being called a genius and him being called a fool was the unpredictable spin of the roulette wheel.
So here is the absolutely crucial insight to distill from this. You can make the perfect, mathematically sound decision based on all available data and still lose everything because of risk. On the flip side, you can make a terrible, highly reckless financial decision and get bailed out entirely by blind luck. This breaks the link between a good process and a good outcome. And this is exactly why we have to stop judging our financial strategies solely by their immediate, short-term outcomes.
This leads us perfectly into our next core concept, the survivorship bias trap. This is a really dangerous illusion we fall into when we only study the winners, which gives us a highly distorted, deeply flawed view of what it actually takes to survive and thrive in the market.
To truly understand the mechanics of survivorship bias, I want you to imagine a massive lottery. Picture exactly 1 million individual people, 1 million identical decisions. They all wake up, drive to the store, take the exact same action, pay the exact same price for a ticket, and they're all hoping for the exact same life-changing result.
But here's the kicker. We only ever see the one visible winner on the evening news. We read the biographies of the one winner. We buy their online courses on how they supposedly pick the winning numbers. We lean in as if they possess some highly guarded secret to success. But we completely ignore the 999,999 invisible failures. We never hear from those invisible losers, even though their outcome represents the actual statistical reality of that decision. When you only look at the survivors, you become completely blind to the true probability of risk.
Let's ground this with an analogy. Driving safely for years without wearing a seatbelt doesn't mean you're immune to car crashes, right? You can drive to work every single day for a decade without a seatbelt and arrive perfectly safely. You might even start confidently telling people, "I'm such a good driver, I don't need a seatbelt." But in finance, an absence of failure is absolutely not proof that danger doesn't exist. The risk hasn't disappeared, it's just waiting. Earning profits through risky, highly leveraged investments for a few years doesn't mean you're a genius. It just means danger hasn't struck you yet.
Overconfident investors who ignore the role of luck eventually get utterly crushed by reality, whereas the absolute best investors out there remain remarkably humble. They understand deeply that markets shift dynamically, new technology can wipe out an established industry overnight, and massive, unexpected global events aren't just possible, they are guaranteed to happen. Humility is your financial armor. Arrogance, that stubborn belief that your success is entirely of your own making, just leaves you completely exposed when the wind inevitably changes direction.
So, if the universe is this chaotic, the question becomes, how do we focus on what we control? What exactly can we do? Do we just throw our hands up in defeat and leave our financial futures entirely to chance? Absolutely not.
You have to ruthlessly focus your energy on the specific variables that you can actually influence, rather than agonizing over the invisible forces you can't. You cannot control the stock market's daily swings, but you completely control how much you save. Honestly, your savings rate is essentially the financial gap between your ego and your income. You can't dictate inflation or global interest rates, but you alone control your lifestyle creep and how much you spend. You can't rush compounding interest, but your patience is a highly controllable asset that pays massive dividends. You control how much debt you take on, and most crucially, you control how you emotionally respond when periods of intense uncertainty inevitably hit. Think of your wealth like planting an oak tree. You can't control the brutal storms, the freezing winters, or the scorching droughts that will eventually hit your geographical location. But you can actively choose healthy soil, and you can water the roots consistently. Think about the contrast between a deep-rooted tree that survives a Category 5 hurricane and a shallow-rooted tree that snaps at the first major gust of wind. Your goal isn't to possess a crystal ball and predict every single financial storm. Your goal is to build a root system deep enough and strong enough to survive them when they finally arrive. Now let's tie this all together with the ultimate financial strategy. Theory and analogies are fantastic for understanding, but practical application is how we actually change our financial trajectory and protect our peace of mind. I really want you to try this mental exercise today.
It's going to build immense gratitude for your wins and deep resilience for your losses. Step 1. Think of a major success in your life, and honestly ask who helped you and what timing worked in your favor behind the scenes. When you win, look for those invisible hands that assisted you. Step 2. Think of a painful failure and identify the factors that were completely outside your control. Learn the lesson, adapt, but refuse to internalize a bad outcome as a total lack of self-worth.
Let's quickly recap our key takeaways and see how this builds our foundation. First, success is always influenced by a combination of both skill and luck. They sit right beside each other. Second, failure happens, and it frequently includes massive risks completely beyond our control. Third, never judge the quality of your decisions solely by their short-term outcomes. And finally, relinquishing the exhausting illusion of total control is actually the most empowering financial move you can make. Why? Because it frees up your mental energy to prepare for absolutely anything.
If you take absolutely nothing else away from this explainer, write this down. I want to leave you with this phenomenal quote that perfectly summarizes our entire journey today. Work hard, make smart decisions, but never forget that luck and risk are always part of the story. Hard work is non-negotiable. Smart, rational decisions are your baseline. But never, ever forget that the invisible twin forces of luck and risk are in the room with you, actively writing the story of your life right alongside you.
So that leaves us with one massive question. If wealth is so dependent on uncontrollable forces, why are some of the wealthiest people in the world still profoundly unhappy? I want you to think deeply about this provocative question, because next time in our explainer, we're going to explore why learning to say enough might be the single greatest, most liberating financial decision you will ever make. We're going to unpack why moving the goalposts ruins the game, and how true wealth is deeply connected to knowing when the endless chase is finally over. Until next time, respect the hidden risks, focus on what you can actually control, and keep staying curious.